One thing I've noticed about traders is difficulty of identifying proper pullbacks in the market. There are so many ways you can identify pullbacks or break of structure or change of character. Of course, everybody has their own different concepts, but there's one thing that is similar, which is the pullbacks, right? Now, everyone you see on the internet today, they'll always tell you one thing about pullbacks. Enter at a pullback, enter when you see a rejection, enter when the market is correcting itself. Of course, but then the question is, how do you identify proper ones? Because there are ones that probably it could just be one straight line all the way up, but then they just give you two bearish candles and you're like, that's my pullback, I have to enter at this point. And then there are some candles that might just be one candlestick, and that will be your valid pullback. And now, not everybody knows this, but then I'll talk about it in this video. Well, if you don't know me yet, my name is Joshua. I own this channel. This is the Trading Chronicles, and we've been trading for a while. And I have a community on Telegram down in the description. So if you want to just get access to it, just go down to the description. The link is right there. And also my DM is. So without further ado, let's go right into the system, guys. Alright. So basically we have three examples we're going to be checking out here, although this is already cut. But anyway, let's cut up with our demonstration here. When we'll still have to get it done, regardless. Alright guys, so basically we have example 1, example 2, and example 3. And these are the three examples we'll mainly be focusing on. And yeah, let's just get right to it. So basically, when you say a pullback, or when we say a pullback, it basically means a rejection that happens in the market. So basically, when markets go impulse, so these are our impulse. Remember, the first move always comes with it. It's always called an impulse. Then we have our correction, and then our continuation, right? So basically, this here will be our pullbacks, and most of us, we should be entering at the correction. So if you can integrate that into your work, boom, man, you should be doing well already. So basically, what we're considering here now are candlesticks. So basically, when marking out candlestick, I like marking out the entire candle when it comes to marking out for pullbacks. Now, I'm not talking about break of structure or a change of character, just mainly about pullback. Alright, so whenever you see at the top, we mark it all the way down to the bottom, right? We don't miss anywhere. We don't miss anywhere at all. Alright, so now let's just get right to it. So now at this point, when there's a break above or there's a break below, because this is being protected right now, whatever happens in here is being protected. Only when you have a break above or a break below, then we can consider, let's say, a market continuation or a market rejection. Same here, whenever you have, this is protected, so whenever you have a break to the upside, that will be your market continuation. Sorry, this is sell, so whenever you have a break to the upside, that will be your market correction, and whenever you have a break to the downside, that will be your market continuation. So now let's just come right straight into this three examples right here. This is already catching up. Anyway, I'm still on this trade, guys, this particular trade. Yeah, it's right there. You should see it on the screen right now, sure. But there, just look at the trade. It's about almost 600 pips if I'm not mistaken. Yes, I only entered with the 0.01 position. Anyway guys, let's just head straight in. Let's just continue what we're doing. Alright, so now, starting from the first candle, because we're in a bullish market, right? Starting from the first candle, you can see market opened, this candlestick opened, and then it's closed, right there. Now at the close of the candle, what happened next? There's a break above it. Alright, this candlestick broke above it, right? Now since we have this break above, now this candle is no longer protected to the upside, which means this is a market continuation. Then let's go to the next candlestick, which is this candlestick right here, right? The next candlestick, which is that candlestick right there. Let's adjust this all the way down here, and now we can see one thing for sure. Alright, now you can see that this candle here was protected, and then the candles inside did not come above this point, neither did it go below this point. Now it must not just be a body candle, it could just be weak, even though it's just a wick that came below this or anything. But here there's nothing like that. And where is our next confirmation for the continuation of the buy? Because of course this is a continuation, is right here. Now you can see at this particular place, you can see that we have a break right there. Right, we have a break. We have a break right here. Right, that's basically it. So now this is a continuation. So basically, how do we mark this? We mark this like this. So instead of price pushed up, pullback, no, there's no pullback here. There's absolutely no pullback there. So guys, let's just go directly to example 2. Let's go to example 2. Now, your pullback won't come as a single candle, but then let me explain this. Now, just as usual, we start from the candle below because this is a bullish movement. Now, price got all the way to that point. The next candle broke above it and keeps pushing upward. So we take this all the way up here, and the other down there. Alright, now you can see one thing here. From the continuation, price broke above it again, so making it another continuation upward. Let's just adjust that over there and right there. Now you can see the next candle did not break above, instead it broke below. So now this is our correction, right? The continuation continuous break above the previous candle, and then your correction breaks below, right? So now there's a break below. What happened next? And then it broke above again, right? Now you see your break below right here, and then the next candle broke above. You can see that. So basically, if I'm to draw this, I'll draw this exactly like this. Push upward all the way to this point, your impulse, your correction right here, and then your continuation. You can see that. So basically, this is just a single candlestick, but you can find a valid pullback here, and here this is two candlesticks and there's absolutely no pullback. So don't joke with that. Alright guys, so let's just continue. You can see price is already getting all the way to that point. We'll be fine. Anyway, the third example, let's just get directly to it. Now you start from up here, you mark that all the way down there, right? And then this is protected, but then it was broken down to the downside. It was broken to the downside, which of course means market is bearish, right? Let's say we're having some massive bearish movement and then price is about to give us a pullback. Now, the next candle, right, all the way to this point, right there, and then the other all the way to this point right there. And then let's just expand this. Now you can see, instead of your continuation to break downward, remember, with this is a bearish market, instead it broke above. So it's breaking above basically means this is our correction standing right there. Our correction is standing right here. So now this is one push down and one push up. So next, let's look at this candle. Is it not selecting? Alright, this candle right here. And then it's already caught up with this, but yeah, this is what it looks like. Now looking at this candle right here, you can see that price actually opened inside this candle. So basically, since the thing is staying inside, since these two candles are staying inside, now you can see that there's no break above, there's no break downward, so there's no pullback and there's no correction. There's no pullback and there's no continuation here, right? Now, next place we have our break below was this candle right here. So if we have our break above, we are still, of course, maybe in a corrective movement or so, but now we now have our break below, telling us that, yes, this is a valid pullback. So how do we mark this? We mark this like this, all the way to this point, project upward, and then boom, right? So this is how it should look like, not trying to mark this. So basically, let's just go directly to the chart. There's absolutely no time to waste. Alright, so let's look at some examples. Let's just look at this example. Today is Friday, so this Friday's chart. So now let's look at this. Now basically, first thing first, let's go in and then expand again. So let's say price pushed all the way up to that point, basically pushed down all the way down here. So first we have this candle. Of course, this is looking already bearish, although overall we are bullish. But then let's look at this candle here before those two candles move. So you can see that, looking at this now, we are open at this point and all the way to this point. So basically, two things will be happening. Either price breaks above or breaks below for a continuation. Now look at this carefully. You can see what price did here. Let's go in again. You can see what price did here. It's opened inside this candle. The second candle, same thing. The third candle, same thing. Alright, so there's absolutely no pullback here. Although it looks like a pullback, right? Two candle pullback, of course, but there's absolutely no pullback here. Do not make that mistake. There's absolutely no pullback right here. Okay, so now the next place we have our continuation was down here. Why? Because there's a break outside this previous candle, right? So this movement, instead of marking it this way all the way to this point, rejecting, no, this is a one candlestick movement, all from here all the way down here. That's basically it. And now for our continuation. So yeah, you can see price break above, right, giving us our valid pullback. Yes, but then instead of it to continue to the downside, price broke above and then gave us our pullback right here to the upside. So of course we have this already marked that out, right? And you can see where we have our break to the upside, right? Now this break, let's just mark that. Since we have our break to the upside here, we'll be looking for a break to the downside or the upside. But for a pullback, since this is bullish, we should be looking for our break to the downside. And just look at that. Boom. We have our break to the downside, two candles following each other, and then the next candle opening, right? And then the next candle. Note, this is just like our third example where this candle actually covers this entire candle here. So it basically, this move looks like this. From here, point all the way to that point, down, and pushes up directly, right? Now same thing here. Should we be expecting a pullback here? Let's look at that. Should we be expecting a pullback here? Nope, we should not be expecting a pullback here. We should not be expecting a pullback here. Why? These three candles or these two candles basically are inside these candles here, this candle here, so it's still protected by this candle, which of course just disqualify the setup basically. All right, so we should not be looking for a pullback at this particular place. So there's a continuation, so there's a continuous break to the upside. So let's look for our third example. We don't have to go far. Basically, there are pullbacks almost everywhere in the market for it to retrace and enter a buy. So right here you can see the price of course was bullish, so it's basically bullish, right? We have a very fancy pullback right here. You can see there's a break above and there's a break below this particular place. So there's a break below, there's another break below, and then another break below. So this is a very valid pullback. And then we get here and then we're looking for the second example actually. So at this point, let's take our two. At this point we can see that after price formed these two continuation all the way to this point, right? Now at this point, the first thing we should be looking for is, are we going to have a break to the upside or to the downside? Here we had a break to the upside, right? Now that makes this candlestick valid for us to mark. But yes, after we have our break to the upside, we also have another break to the downside, right? Now this might look funny, but yes, look closely, you see that we still have our break down here. Can you see that we still have our break down here? So this basically looks something like this, all the way down, all the way up, all the way down, and continuation to the upside. Yes, funny enough, this is exactly how it looks. And yes, buying at your pullback for the continuation is always advisable. All right, stick with it always. I still trade continuations, guys. So basically you reject and you buy, it rejects and you buy. This way, tightening your stop loss, getting a better RR. This is basically 1 to 10 already. So basically, advantages of buying at a pullback. Anyway, please don't forget to leave a like to this video and subscribe to this channel, fam. So price still basically bagging up massively, and yeah, we're still in profit in this trade. So just look at the trade right there. And guys, that's basically it for this video. Don't forget to leave a like and subscribe. If you want to join my Telegram, it's right there in the description. Just tap the link, it will take you to Telegram and you can join. Alright guys, that'll be it for this video. And yeah, I'll see you guys in my next video. Till then, stay cool, keep back testing, and yeah, see you guys in my next video. Bye bye.